everyone, and welcome back to the Wisdom by Harry YouTube channel. My name is Harry.
And I'm Mary. We're so excited to have you here today for another fascinating episode.
So today, we're diving into some big shifts in the U.S. economy, especially around trade policy and what that might actually mean for, your wallet.
That's the plan. We've basically gone through a ton of analysis news, research papers, market chatter, the whole 9 yards.
Okay.
And we're pulling out the crucial bits for you. The aim is really to connect the dots, maybe give you those aha moments, and just lay out the different perspectives clearly.
All right, let's jump in then, because it feels like the economic story, it's changed tune pretty fast. It wasn't long ago we were hearing talk, maybe even whispers, of a golden age. Now, it's warnings. Fewer goods, higher prices. Things like kids' toys getting pricier and harder to find.
Yeah, that narrative shift is noticeable, and, there's some hard data that really highlights this change.
Like what?
Well, the latest GDP numbers. The U.S. economy actually shrank by 0.3% in the first quarter of 2025.
Oh, wow. Negative territory.
Right. It's the first negative reading we've seen in quite some time. Now, okay, we should be careful.
Sure.
Some underlying things might still look okay, and these first reports, they do get revised sometimes.
Always do, yeah.
But the timing, politically speaking, well, it lines up with the first 100 days of a certain administration, and that gets people talking.
Definitely raises eyebrows. And it sounds like trade policy, specifically these tariffs on goods from certain countries, is a really big part of this story.
It seems to be, yeah. We're talking about some really high tariffs, like 145% on certain imports.
145%, that's huge.
It is, and the stated reason, the official line, is to push for, fairer trade.
Okay, fair trade.
But honestly, there isn't much public proof yet that we're seeing some big breakthrough on that front.
So what are we seeing?
Well, more immediate things. Like businesses, they seem to be rushing to stock up on imported goods now.
Trying to beat the tariffs going into full effect.
That looks like the most likely reason, yeah. And interestingly, that import surge actually dragged down that GDP number we mentioned.
Wait, so more imports made the GDP shrink? That sounds backwards.
It does seem counterintuitive in the short term, doesn't it? But GDP calculation focuses heavily on domestic production. So a big wave of imports registers as less domestic output in that specific quarter snapshot.
Oh, okay, got it.
But stepping back from that short-term blip, the longer-term forecasts for these tariffs, they're pretty concerning.
How so?
Some economic models are predicting they could knock down our long-run GDP by something like 6%.
6%, that's massive.
It is. And wages could take a hit too, maybe around 5% lower in the long run. For a typical middle-income household, that's estimated to be a lifetime loss of maybe around $22,000.
Wow, $22,000. That's not pocket change. How does that stack up against the money the government might actually bring in from these tariffs?
That's a really crucial comparison. So the conventional estimates, they suggest maybe $5.2 trillion in revenue over 10 years.
Okay, sounds like a lot.
It is a lot. But when you weigh that against this potentially much, much larger hit to the overall economy, to GDP, to wages,
right,
especially if you compare it to, say, getting that same amount of revenue through something like a corporate tax hike, well, the analysis suggests tariffs are just a much costlier way to get there.
Like using a leaky bucket, maybe?
That's a pretty good analogy, actually. You lose a lot more along the way compared to a more direct method.
So, bringing this down to earth.
Yeah.
How does this actually play out for regular people, when you're at the supermarket or buying school supplies?
Well, the direct expectation is higher prices. Simple as that.
For everyday stuff?
Yeah, think groceries, clothes, electronics, school supplies. So many of those things come from places affected by these tariffs.
Okay.
So you might see fewer choices on the shelves, and what is their costs more? That example of dolls becoming pricier. It sounds small, but it shows how widespread this could be.
It does. Because, I know I felt my grocery bill going up. Is this tariff situation likely to make that feeling worse? Yeah. That your paycheck just doesn't go as far?
Yeah, exactly. That's the concern. And it's really important to remember, even seemingly small price hikes, they tend to hit working families the hardest.
Squeezes those budgets even more.
Precisely. Much bigger strain when things are already tight.
So, with all this uncertainty swirling around, what are the financial markets doing? How are investors feeling?
Well, pretty jittery, it seems. We've definitely seen the stock market dip at times. The dollar's value has weakened, which is kind of typical when there's this level of economic doubt. And beyond the markets, there are rising worries about unemployment potentially ticking up, inflation forecasts getting higher.
And people feeling less confident.
Yeah, consumer confidence numbers have taken a noticeable dive. People are feeling less secure about the economy and their own finances. And businesses, they seem to be getting cautious too.
Yeah, so pulling back.
We're hearing reports they're lowering their earnings projections, basically signaling they expect tougher times ahead.
So this isn't just consumer sentiment, is businesses getting nervous too?
That's right. And a big piece of this is just the sheer uncertainty around economic policy. It's jumped significantly.
Okay.
And when policy is unpredictable, what happens? Businesses, individuals too, they often just hit pause.
On big decisions.
Exactly. Postponing investments, maybe holding off on hiring, delaying big purchases. Some analysis suggests this uncertainty alone could reduce investment by a measurable amount just this year.
And that feeds back into the economy slowing down.
It can, yeah. Reduced investor confidence, maybe less international cooperation.
Yeah.
It all sort of threatens the longer-term picture.
Okay, so putting all these pieces together, the GDP dip, the tariffs, the market jitters, the uncertainty, does this mean the risk of a recession is actually going up?
Unfortunately, that does seem to be the direction things are pointing. Several different indicators are flashing yellow or maybe even red.
What kind of numbers are we seeing?
Well, one market-based measure puts the probability of a U.S. recession within the year at around 59%. Another analysis pegs it even higher, closer to 60%.
60%, that's quite high.
It is concerning, and analysts are specifically citing these sort of aggressive tariff policies as a key factor pushing that risk higher.
Right.
And it's interesting, some forecasts are now predicting the central bank might actually have to start easing monetary policy and, cutting interest rates or similar moves later this year to try and counteract some of this.
Trying to cushion the blow, maybe?
Potentially, yeah. Responding to how things are evolving.
Now, inevitably, there's the political angle. Are we seeing attempts to sort of pin any negative economic news on previous administrations?
Oh, absolutely. That's a pretty standard procedure in politics, isn't it? Blame the folks who came before.
True.
But it's maybe a harder sell this time, because the current administration has made such significant policy changes itself, especially on trade.
Right, you can't just point backwards when your own actions are clearly shaking things up now.
Exactly. So if the public perception of economic management starts to weaken, that could definitely erode political support.
And are there signs of that? Or maybe concerns within political circles?
Yeah, we are hearing about some political figures expressing, let's say, unease about the current economic strategy, worries that it could actually undermine other goals they have. It suggests there might be a bit of a disconnect, between the optimistic messages perhaps coming from the top and the economic realities a lot of people are actually grappling with.
Okay, so let's try and wrap this up. If you had to boil it down, what are the absolute key takeaways from this deep dive for our listeners?
Right. So number one, the U.S. economy is definitely in a phase of significant uncertainty right now.
Okay, uncertainty.
We've seen that recent GDP contraction, and there are major concerns about these ongoing trade policies, particularly the tariffs.
Got it. Tariffs are key.
Yes. They're projected to have pretty substantial negative impacts on overall growth, on wages, and on the prices you pay.
Right, which affects everyone.
Absolutely. And all this is feeding into a higher risk of recession, and it's clearly making markets and investors nervous. That's the big picture.
So, yeah, this isn't just numbers on a page. It has real consequences for all of us, for you listening right now.
Precisely. That's why we did this deep dive, to hopefully give you a clearer, more concise handle on these really complex forces shaping things right now.
And it really leaves us with the big question to chew on, doesn't it? Thinking about these potential long-term effects. What should we, individuals, policymakers, be considering? What steps might we need to take to navigate what's coming?
That's the crucial question. It really underscores how linked everything is: trade, the economy, your own financial situation.
Absolutely. Well, thank you for breaking that down for us.
My pleasure. It's definitely a time to stay curious and keep digging into these important issues.